I'm going to go across to Mayuresh Joshi, the fund manager at Angel Broking, to talk more about this big story on your screens at the moment. Hi, Mayuresh. This is Nayantara. Fine, it's totally understandable. How can a company or any government look at selling companies right now via OFS? So looking at the next best option, that's buybacks as well as ETFs. But the problem I have with the strategy as well, and I think the markets will have, is there an appetite for PSUs? Look at what has been happening. If you look at the CPSE ETF, it has stocks like ONGC, Coal India, IOC, GAIL, Oil India, PSC, REC, Bharat Electronics. Is there appetite for such an ETF at the moment? Bharat 22, still more lucrative. It has the private sector stocks like L&T and Axis Bank, etc.
Afternoon, Nayantara. No, absolutely. I think the first ETF was a success, more or less because it has a blend of both PSU and private stocks within the suite universe as well. And again, I think the pricing at that point was quite reasonable. Now, at this point of time, when you're probably talking about a mix and weightage, specifically in terms of PSU stocks, and again, I think the kind of uncertainties that one probably looks at within the macro universe, one cannot predict how the Brent pricing will pan out, what probably happens in terms of the volatility in general for emerging market currencies, which will affect the Indian rupee as well compared to the dollar or the dollar index. I think that will have a huge say in terms of how the sensitivity to earnings of these companies will pan out. So I think uncertainty of earnings is something that the markets do not like. When there is certainty of cash flows that certain businesses can generate, the markets can still gestate because of global domestic factors, stocks coming down, but they being qualitative buys. But I think with such scenarios which are outside our control, I think they become very difficult scenarios to predict. Both the earnings trajectory and the sensitivity to earnings probably is much skewed to these external events. So I'm not really sure how the appetite will be for these ETFs.
Also, since we are talking about a CPSE ETF, just wanted to get in your perspective on the PSUs that have been on offer in the past and the ones which are likely to be in the future. What is your view on the overall universe when it comes to public sector companies?
No, so I think selectively, I think they are looking in the value zone if they correct further from the current levels. So, for example, I think the entire aftermath that you probably saw within the OMC stocks in general because of the excise duty cut and the 1 rupee burden that came through. I think the government was very, very proactive in that sense when they bought out and they came out with clarification saying that deregulation is still on. And again, the price hikes that we've seen, both in terms of diesel hikes taken over the last few days, is a testimony to that fact. Now, I think these two key variables, as I discussed earlier, crude, Brent pricing, and again what happens with the rupee depreciation against the dollar, I think are extremely critical for their earnings perspective. And again, I think the kind of deterioration that we've probably seen in their book value because of all these factors and the fall in the market price, I think it gestates to a large bit the kind of hit that they'll probably take within the marketing margin part of their business. But the other part of their business is still remain pretty okay. So when you're talking about the petchem business, the pipeline business, the investments that they've probably done, the expectations of further capex to probably improve their complexity ratios, I think any decline, I think OMCs probably become good value buys. Similarly, I think selectively within the PSU banking space, I think what you're probably hearing in terms of the hit that they might take because of the norms issued, the advances growth slowing down, provisioning still remaining on elevated levels, more or less because of the aging related issues. But again, recoveries update should be fine. Normalization in terms of at least the well-capitalized, larger and PSU banks can probably deliver better earnings growth compared to the others. So selectively within the PSU space, I think there are value plays still existing.
Mayuresh, let's go from the public sector to the private sector. I'm going to be talking to you, and I want to talk to you about Reliance Industries. It's coming out with its earnings anytime between 5 and 6 p.m. today. The market's also hoping there could be some big deal announced, controlling stake of Hathway as well as Den Network. Clear focus is on new economies at the moment, but also are all of you hoping for some rumblings when it comes to the old economy? If you're going to see crude prices shooting up, is this not a new opportunity for Reliance Industries?
So, Nayantara, I think one really needs to understand that refining and petchem have been doing the bulk of the EBITDA for Reliance over the past so many quarters. I think with a lot of capex largely behind them, the values that are probably expected to come through from these new commissioned capacities, whether you talk about the refining of gas cracker, whether you're talking about the petcoke gasification, or whether you're talking about even in terms of replacement of feedstock in terms of the shale ethane compared to the costlier ethylene that they probably used to do earlier. I think these are going to be value-added improvements that you're probably going to see. Again, I think the crude price rise that you've seen, the rupee depreciation, certain petrochemical products, whether they are on the polymer side or the polymer derivative side or even on the polyester side, have seen price hikes, and there is expectation that the petchem business will show reasonable volume growth, and the EBIT margins that it posted in the quarter gone by, I think those should be maintained. So I think there is a solid performance expected from the petchem division. Refining, again, I think there is moderation that is expected in terms of GRMs, expected to come anywhere between 9.8 to 10.5. And the logic again is very, very clear. I think what you've probably seen in terms of lower light crude differentials, the lower product cracks, and a certain facility in terms of Kathleen cracker was probably shut down for a few days. So that will have an impact, but it is going to be still better than the reported Singapore GRMs. The telecom part of the business is going to be very, very interesting because we ended on an exit rate in terms of subscribers for Q1 at 215 million odd. There is every expectation that they might add 30 million odd.
Okay.
There might be a slight moderation in terms of ARPUs because of increased OPEX costs.
Right, Mayuresh. Thanks much for taking time out to chat with us about your perspective on the public sector space and also giving us a sense of what you are expecting from Reliance. Keeping it with Reliance, and let's